Hi, everyone. My name is Phil Blancato. I'm CEO and President of Vladimir Kalman Asset Management, Chief Market Strategist for Jose. Forgive me, I'm adjusting my camera there for a second. Hope you had a wonderful weekend. As many of you know, when I do this podcast over the years, I've often talked about some of my favorite days of the year. Christmas Eve is a big Italian holiday, and all the fish that we eat, and the number of fun holidays throughout the year that I try to celebrate. But there's one quirky one for me that I talk about a lot. And for those people who know me well, I have to just mention it once again. My second favorite day of the year just passed, yesterday. And what was exciting about it is I just think it's kind of cool that we celebrate not just Father's Day, but the longest day of the year. So first off, to the dads out there, very happy Father's Day. Hope you had a wonderful weekend with your family. Hope you got a chance to relax and enjoy it. As you know, I have my two daughters. I didn't do very much. I did some work around the house, nothing too exciting. I got a chance to relax a bit. I had wonderful lunch with my in-laws and my wife and my daughter. The other kids not around. That's okay. Marcel is down in Atlanta watching Spain play in a World Cup game, so I totally support that. Big soccer fan. And Luca was here enjoying lunch with my in-laws, so that was a lot of fun. My wife and they made big dinner, so we had a great time. Nothing too crazy, but the longest day of the year. I love the longest day of the year. It's my second favorite sort of equinox of the year, or one of my second favorite days of the year. My favorite is the shortest day of the year, the winter equinox. December, depends on the year, 21st or 22nd. And the reason why I like it so much is every day after that gets a bit brighter. But right now, it's the longest, warmest days of the year. And the sun stays about this time. We won't set to about 8:30 on the East Coast. We'll have light until about 9:15, 9:30. It's really quite wonderful. And it'll stay this way for the better part of a month, which is just wonderful. And then we start tipping towards fall. Can you imagine all of that already? I can remember lots of times my wife would say she hated this day because she was only 6 months away from Christmas, even less, Christmas Eve. Those days are not the same when the kids were little. There was just too many presents under the tree, but it's all good. So besides that, I hope you had a wonderful weekend. We finally warmed up in New Jersey, and my garden's going gangbusters. I got tomatoes all over the place, so that's a good garden update. If you get a chance to swing by New Jersey, my gosh, it's just what a year. The tomatoes are really coming in very, very well. And finally, I was looking at my sauce collection. I got plenty of sauce left. So some of you out there, if I owe a jar of sauce, to remind me, and I'll get you one. We got to make our new batch in just a couple of months here. A lot going on in the markets. I always say that because to me, there's always something exciting to talk about. But I do think markets right now are in a bit of an unusual place. I read a piece about the June gloom or the June swoon. And I struggle with that concept. I'll give you a basic kind of thing to think about as we open up today. When you look at some of the historical metrics, whether it's price to book of the S&P 500, how much the companies are worth versus how much they're trading at, or price to earnings, the more popular one, trading at about 20.68. Now, the S&P 500 on the year is up 10%. So normally that number of 20.68 would be higher. We look at that metric divided by the price of a company versus how much they make. And that's a simple equation. That's sort of a starting point to analyze markets. And we've seen that number be 22, 23, 24 over the last few years, but there's something phenomenal has happened this year. Incredible earnings growth. And as long as we continue to see incredible earnings growth, it's hard not to be somewhat optimistic on the S&P 500. Now, I'm going to go back and forth today. I've got a lot of things I want to throw at you today. But certainly, I'm on the standpoint that markets are up over 10%, which is an incredible number. We've seen this sort of letter of understanding, MOU with Iran. You can debate politically whether or not this war ever made sense or not. I guess we really won't know for years. Does Iran's nuclear capability, has it really been destroyed? And will they ever go back and rebuild it? Who knows? I see that the president knows this is a no-win situation, is willing to accept the fact that the strait's open and they're not going to have nuclear ambitions and the rest is irrelevant. So much for regime change or helping out the Iranian people. That seems like that's not going to happen. Not my jam. I don't get into that very much. I would say that on the surface right now, it seems like that's not the case. But, their economics are terrible in Iran. They really have incredibly high inflation, very high unemployment, a very angry group of people that live there. And unfortunately, I just read over the weekend there's a number of hangings happening for people who were anti the government. So the government's still murdering its own people. I gotta assume someday there's an uprising, but who knows? For today, at least from an economic standpoint, that door was gone. That wall of worry is gone. We've got very strong earnings. We're gonna get Micron Technology's earnings report here. Micron's an interesting name. I'm not recommending it. I'm just saying it's an interesting name because in this sort of side effect or this impact of AI and what other companies are doing quite well, it's a company like Micron, which is not really an AI company. They just make hardware, data. They create these basically components of what AI needs to store data. And the reason why that's so important, you've used Micron Technology forever. Remember that hard drive in your computer? That's who made it. SanDisk, companies like that. Well, suddenly that area has become one of the hottest parts of the market. Now, the demand cycle that they're in is incredible. They have much more demand than they have stuff they can sell. So to me, this will be a really good example of, is the AI story still real? Because the reality of the market right now is we're seeing this kind of euphoria happen in the market. But truth be told, if you strip out 81 companies that are technology related, and you strip out energy companies, the rest of the S&P is down. Wrap your head around that. Take out AI, and then 81 companies. So look, the S&P is only 500 companies, so take out 81. Let's be careful about how I look at this math. But still, taking out 81, and the energy-related companies gets you to about 1/5 of the S&P comes out. The other 400 are down on the year. So this has been about AI. But the reality is AI continues to impress. We see earnings growth that's quite significant. In fact, when you look at the average earnings consensus, what companies, here's what we think we're going to make, and then they report what they actually make. That's called the consensus earnings. Why that's important is right now, 85% of companies are beating their consensus estimate, their best expectation. Those are really strong numbers. And when you think about earnings growth on the S&P this year, it could be as much as 22% for the year. We normally have 8 to 10. So you can talk about a double, if not more. So really quite impressive. Now, the momentum stocks are winning, which is AI. Momentum meaning companies that grow on a regular basis but don't pay big dividends. Think about Caterpillar versus Microsoft. But even Caterpillar has become somewhat of an AI name. That maybe was a bad example because they make power generators. But momentum is up 35% on the year, and quality is up 10. Now, quality, some of those is a whole. When you start getting this mumbo jumbo of definitions, you could argue Caterpillar is quality and Microsoft is momentum, just to keep it simple. Think about companies that make stuff every day versus companies that are in technology. In any event, when I strip out that top 100, which is mostly momentum, those are the winners. In the quality names, Corning is a quality name, up 141% in the last 12 months. Cummins Diesel, Caterpillar, quality names. So some of the names are actually doing okay. But the trick here is the market gotten too expensive? And there was an interesting article in the Wall Street Journal over the weekend, and the article alluded to, is the flood of money going into AI a warning sign? And is the market just trading too rich? Are we looking at all these kind of goofy things that are happening and suddenly saying, maybe we should, check ourselves a little bit? So the first thing that was being talked about is valuations. Now we have stretched valuations. And in fairness, the market's been up 3 years in a row and had that double-digit returns. There's an old measure called the CAPE ratio. It's a different way of looking at it than PE, and that's been elevated for the last 10 years. So, and that was by Robert Shiller, who won a Nobel Peace Prize on it. It basically looks at the long-term earnings, not just one small period of time, but the long-term earnings, and suggesting that companies are from their stock prices high above what they're actually earning. We still have higher interest rates. Rates are not coming down. Kevin Warsh, the new Fed chair, came out last week and said, you're probably going to hear a lot less from the Fed, maybe a bit less transparent. Focus on 3 things: interest rates, what's happening with unemployment or employment, and then shrinking the role of the Federal Reserve by not having so much effect on the money that they borrow and lend. See, the Fed can manipulate markets pretty easily by having this gigantic. It's like have a big checking account, and the more checks they write, the more liquidity is in the market, more cash is available. The less checks they write, well, then less so. So I think he's in the camp that they're going to write less checks to keep things going. That's quite interesting to me. Then there's the worry about AI spending. And are we seeing a slowdown in AI spending? And we're really not, but this article went on to say that that's why wouldn't that happen? I mean, the SpaceX euphoria is quite fascinating. I'm going to do a separate video on SpaceX later today about the next kind of monumental steps of SpaceX, which is as it gets added to certain indexes like the S&P 500, very large, the large growth indexes. Every time it gets added to a new index, more money is going to flow into the stock, and the stock is trading at around $186, which is quite incredible that it came out at $137. So the more it gets added to the indexes, more than likely that the more buyers of the stock. Again, not recommending it, but certainly there's a lot to think about when you think about this momentum of AI and AI spending. Is now a SpaceX an AI company? Maybe, maybe not. I mean, certainly they launched rockets into space with satellites that support AI. They want to build data centers in space. Well, that supports AI. Gronk is probably going to get rolled up under the SpaceX name, which is the AI bot that is owned by Elon Musk. And then eventually Starlink, this incredible, by the way, if you've never used Starlink, you got to try it. Oh my God, it's like nothing you could imagine. When it comes to the speed of the internet, it really is fascinating how fast. I've been on a United Airlines flight and I've used this thing, and it's incredible how quick it goes. It's as if you're in your office on an airplane doing 600 miles an hour. Anyway, so that was the concern about things like SpaceX and all this euphoria, all this money being pumped into the market. Is it justifiable? Is it the right thing? I'm always been a fan of when it comes to markets and what's happening. You don't want to fight. You don't want to manage money by headlines. That can be very dangerous. I think that's we've talked a lot about that over the years. Certainly, you don't want the headlines kind of induce what you're thinking. Look, we're at all-time highs in the market, and yet there was a war between the United States and Iran, or conflict, whatever you want to call it. But certainly, those are things that I think should have you a little bit spooked, and yet look where the markets are at. So don't let headlines drive this. But certainly, when you think about these worries, the market always does a very good job climbing this wall of worry. That's fairly normal. But and we've seen lots of periods of time. Look, Russia, Ukraine, we ended up being higher now, about a few months after that began. Now it's a much more serious war. And it looks like Ukraine might just be turning the tide against Russia. I would have bet a buck for sure if you'd have told me that Ukraine would have even lasted this long. But beyond lasting this long, they might win this thing. I mean, who knows what happens, but it certainly seems like there's a possibility, excuse me, that Ukraine could force Russia to the bargaining table because they're hitting them pretty hard. They've turned out to be a drone manufacturing nation that is cranking out really deadly stuff. Anyway, had you told me that the market would be pushing that much higher on the other side of this quote unquote this war and two wars at that, who would have thought that? And especially one that's gone on this long. But when you look at the S&P up 10% on the year, what was the winner last week? Small cap stocks. Remember, we talked a lot about small cap stocks being diversified into other companies. In fairness, it's a bit of a junk rally in small caps. A lot of companies that show a lot of promise but don't earn a lot of money. However, the Dow up quite a bit, 8% on the year. The Russell 2000 up 20%. By the way, that's the small cap stocks again. But for the week, things like IFA, international stocks, actually, because there's a little bit of a relief from the oil situation, up almost 4% on the week, just about. They're up over 10% on the year. So the markets around the globe are doing great. South Korea is the driver of emerging market success, up over 28%. Why? Because it's kind of the same thing as a tech trade. The NASDAQ up 15% on the year, but a whopping 23% just for the quarter. Incredible. And then the bond market's finally showing some signs of life, up half of 1% on the year. They got half of 1% just last week. And the reason why the bond market is showing some signs of life is because with the war ending, the expectations that oil is going to come back down, and with oil going lower, I did pay $3.75 a gallon for gasoline, which was a heck of a lot better than the $4.50 I've been paying, no doubt about it. But on the latest price of oil, I'm just double checking it real quick. We continue to be in the 70 plus range, which is kind of interesting because to me, when I see this, scenario where I think we're going to be here for a while, 74.65 on oil. Brent crude, which is another measure, 77.6, both down on a day. And that's just assuming that the Strait is going to allow oil is going to go through on a pretty rapid basis. And that seems to be the case right now. So with oil coming down, inflation and interest rates come down, you probably have this scenario where this concern about the Fed cutting interest rates is maybe begins to happen again, at least a hint of it, but not the other side, which is there was a lot of belief that the Fed was going to be hiking rates. And assuming oil stays down at this rate, I think it's safe to assume that you don't have to worry about the idea of the Fed hiking rates. Now, if the Fed was to hike rates, oh boy, that would be a very difficult scenario, and we would have a very difficult time in markets. I put this all together so we could say there's this new batch of headlines coming out, and the new batch is coming out to say, hey, wait a minute, time out. Things are just too good. And I call this a Goldilocks environment, not too hot, not too cold. And I still think that's an accurate statement. And the reason why I think it's an accurate statement is because you have a scenario where today, there's this guessing around the Federal Reserve and whether or not they're going to cut or hike. And that always is a bit of a headline. There's this concern about stock valuations, and is this just all AI and nothing else? Well, why would the Russell 2000 be beating all the other indexes if it was just AI? Remember, the Russell 2000 stocks are not in the S&P 500. So there are other places in the market where you can have real success. It's just a matter of, are you willing to think beyond AI? And if you win the small cap stocks this year, you're killing it. And for all the hullabaloo about, just trying to time the Federal Reserve, it's a fool's errand, especially with Kevin Warsh. Kevin, I think, is a more pragmatic guy, one that's going to give you the facts and no conjecture, no grand expectations of what to come, no side notes, talk less, have much more easier notes. I don't think he's Jerome Powell. And I like Jerome Powell. I thought Jerome Powell went through some very difficult things, and he came out the other side of it did well. I have no issue with Jerome Powell. A lot of people do. I do not. I think Jerome Powell did a wonderful job. So my credit to Jerome. And I think it's kind of cool that he's stuck around. I think he's doing it to protect his legacy, but I think it's kind of cool that he stuck around. That's the market update for this week. I got some other headlines I just want to hit on real quick because I think important. I get the question a lot about Social Security. What's going to happen there? Stop worrying about Social Security. It's a problem if Congress and the Senate or the House, whatever you want to call it, does it eventually fix it. By right now, the latest expectations are that by 2032, Social Security benefits will be cut down to 78% of what you thought you're going to get is what you're going to get. Now, any elected official who doesn't fix this is going to be fired, and someone else who's going to fix it will get hired. Ultimately, it's going to be a combination of taxes, a combination of changing the age, and a combination of who gets the benefit. But I don't think you need to worry about it. I just don't. I think today, yes, we're pouring out more money than we're pumping in. That's a reality. But I don't think it's this ever-ending problem that we're never going to get around. I think that's silly to assume that. I get this question so often. I just got it again over the weekend. You got to relax. I don't think it's a big deal. I'm not terribly concerned about it. Some other headlines I saw which are interesting. Did you see the UK Prime Minister Starmer resigned? Another UK Prime Minister getting kind of shot. And why is that the case? Because the UK economy is terrible. In the end, politics and economics do connect. And it's who gets hired and who gets fired. If President Trump manages to get gasoline back down to, I don't know, $3 a gallon, something like that, by the time election season comes, whether we won the war with Iran or lost, I think it's going to be somewhat irrelevant. But it comes up, people vote with their wallet. And what's happening in the UK is exactly that. I think people voted with their wallet. And what the result of it was a scenario where, in fact, people were upset. We were upset about what happened with the price of oil. And when the UK and the rest of Europe decided not to participate, they had to hike interest rates, not lower them. Fascinating stuff. Now, I thought I'd switch gears for a minute and hit on another hot topic I get a lot. Price increases. Many of you are concerned about the cost of things and that will it ever come back down to what it was? And the short answer is no. I don't think we're going to see prices other than eggs. Eggs are actually lower than they were in 2019. But things like beef, I don't think it ever comes back. There's just not enough heads of cattle. We could debate why that is. I think it's the ranchers taking advantage of a situation. Never let a crisis go to waste. But why is the number one most expensive thing in your life post the pandemic car insurance? What does that have to do with the pandemic? Nothing. There were no shortages of car insurance. But there was a great study done over the weekend by the Wall Street Journal, and I'll give them credit for this. They looked at the difference, things in folks' lives that have gotten more expensive. And it comes out that specifically around home ownership. Emergency repairs are up 175% since 2019. Home maintenance up 85%. By the way, it's Prime Day. So maybe it's a way for you to buy some stuff for home maintenance that you might save some money. Prime Day, I think, starts tomorrow. There's a chance to buy some stuff. Insurance, 72%. Never let a hurricane go to waste. A couple of hurricanes down in Florida, and suddenly everybody has to hire insurance. Interest rates up 35%. property taxes. Property taxes, and I live in New Jersey, and I do not have a big home in New Jersey, and I pay nearly $25,000 a year in property tax. Can you imagine that? It's a 3,000 square foot home, but a lot that's 65 by, I don't know, 120, and I pay $25,000 a year in tax. It's mind-boggling to me how much we pay. And give you an example, a breakdown. If you bought a home in 2019, and you bought that home for $517,000 with 20% down, if you try to buy that same home today, and you do the exact same thing, because of the increase in interest rates, you'd have to reduce the value of the home, assuming you make the same money, from 517 to 384. So 517,000 in 2019, you have to buy a home worth 384,000, assuming you have the same income, same wage. But your wage is probably up a bit, but it's really hard to justify that. Why is this? Well, I think we got into a scenario where once it became obvious that the American consumer was willing to pay anything it had to pay to survive in the pandemic, you saw this skyrocketing inflationary scenario. And I really think there was a reset post-pandemic. And I hope that AI productivity brings some prices down long term. Not the case yet. We're seeing some of that, not a lot. It's seen in places like fast food restaurants. McDonald's able to use some AI-powered bots to bring costs down. But we're not quite there yet. So the idea of expenses going down, especially at a time when headline inflation is 4.2% and core inflation still at 2.9, still higher than we want them to be. But it just tells me that we have this kind of we're stuck. And I think we're stuck in it because we have a scenario where it doesn't look like inflation is going to cool enough, or we need deflation. Now, will insurance companies eventually battle themselves out and lower car insurance? I don't have a chance. Will my taxes on my home in New Jersey ever go down? Not a chance in heck. Never. You'd have to. New Jersey's a broken state. I love where I live, but it's a broken state. And I think ultimately you have these scenarios where, in order to, expect some change, I think it's asking a lot. So on the flip side, why are we as a consumer okay with it? Well, I'll give you an easy answer. Because unemployment's some of the best it's ever been, very low rates. Interest rates, while higher than they were, they're still not terrible compared to what they were over history. So the average 10-year U.S. Treasury return was 6% for decades. Now it's 4.4. And then ultimately, the consumers made more money than the rate of inflation for 8 out of the last 10 years. Right now, it's not. Right now, with the spike of inflation, wages are below, but I think that'll correct itself pretty soon. So what we find is one of the things I gauge a lot on, retail sales. When we saw retail sales come out last week, the number was really quite strong. And it wasn't just because of things like gasoline. Total credit card borrowing was up year over year, but not in any significant concern. Outstanding auto loan balances today are reaching 1.69 trillion, and have been and it's an increase of about 18 billion, but again, not a big deal. Loan duration, the length of the loans are going out a little bit longer, about 7 years, but still not a big deal. And what we see right now is from an overall savings rate, how much folks are saving. We're a little low there. We're at 2.6% down from 3.2. But, that range is relatively okay. I don't have a big problem with that number. If it goes negative, I have a problem, but I don't have one yet. But what we saw in retail sales was the number was good. And the reason why it was good is because, as I mentioned, the U.S. consumer is in really pretty good shape. Even when you strip out gasoline, because in the retail sales number is the price of gasoline, we saw retail sales up 7% with gasoline in it, and over 5% with gasoline out of it. So they really beat expectations. Really very impressive. So core sales, just core sales without food and energy, was up 0.6 month over month. That's a solid number. On the other hand, we saw housing starts down 15.4%. That was a little bit of a concern. Never let a crisis go to waste. Keep prices higher and build less homes. It's the same thing. Somehow we got to break this trend of major industries not going back to where they were pre-pandemic. Maybe it's going to be a productivity issue at some point down the way. But I think ultimately we're in really good shape. Right? We're in this Goldilocks environment, not too hot, not too cold. Is it amazing because of prices? No. Could it be better if wages were higher? Yes. But do we have great earnings growth on companies in the S&P 100, especially the top 100? without a doubt. So I think we have a scenario where I'm not in the camp of a major bust coming. Now, September's the worst month of the year. We're not too far away from that. Hard to believe that already. And we do have these concerns about this is an AI fueled market for the most part, other than say small caps international still doing fine. But as far as the S&P, it's still the bulk of its AI stocks that are driving the returns. So I just think you have to keep a close eye on things like personal income. This week we're going to get personal income coming out. So PCE. And why I care about PCE, because that's the gauge the Fed pays a close attention to. The number is going to be somewhat irrelevant because it's going to be based on last month when oil prices and gas prices were higher. But we will get Michigan survey, and that's going to be with gas is down about 50 cents across the country. Maybe and soon it'll be down about a buck. So probably next month's numbers are a bit more relevant. But let's look at the core PCE number. That's the one that the Fed cares most about. That's where you take out food and you take out energy, and we get an idea of what we all really spend on a day-to-day basis. And I think that's important that we have a good feel for that. Because if the trend starts to go the other way, down, not up like it's been, then you might start talking about maybe there is a cut later this year. I don't think so. Probably early to next year. But for now, things are pretty good. For all the concerns you see of these headlines, Iran issue, what's going on with the president, Lincoln reflecting pool was supposedly sabotaged. I don't know. All these goofy things that happen out there. I don't think it's that big a deal I wouldn't be too worried about markets here. Someone asked me today, should I be buying stock right now? I think you should always be buying stock. There's never a time not to buy stock. But you want to buy stock smartly. You want to go out and buy the most expensive AI companies? Micron Technology is a really expensive company. Their demand might be so much higher than what they can meet, and maybe that's something you buy it for or not. Again, not recommending it. But analyzing the companies one at a time is really important. So I think when you listen to my notes every week, our podcast, I think you should consider where you can invest internationally, where you can go into the small caps. Look, just last week, mid caps roared, and mid caps have had a pretty tough go so far this year, up 1.24%. One of the best weeks they've had all year. If you don't have a mid cap exposure, you probably should. So my point to this week is not too hot, not too cold. Don't let headlines get in the way. But I do think for all the naysayers out there, I don't know that we need to worry about storm clouds in June or June gloom just yet. Should we maybe down the road consider something September when we'll see how the summer does? Yeah, sure. We'll see how the consumer spends in the summer because the summer is a big spending season as well. A couple other fun points before I let you all go back to your daily lives. I know that's important for you to get back to your daily lives. I saw Serena Williams is going to play again. I didn't know she was coming back. Serena Williams will return to women's singles. How about that? I'm sure you've seen her on the Ozempic commercials, and she lost a significant amount of weight, so she's ready to roll. And I always thought the folks who went on that lost her muscle tone. Well, I saw a picture of her. She looks shredded. She looks like she's ready to go. I saw some pretty exciting things around lithium. That there's a huge land grab for lithium, and GM is jumping into the lithium scenario. That they want to start to mine it themselves rather than be reliant on China. I think it's a very big event. I'm excited about that. Toy Story 5 came out. And why I mentioned that, my kids love Toy. We love a Toy Story. And it actually did $160 million of box office receipts, the seventh biggest animated event ever. Really pretty cool. I think that's fun. World Cup. I'd be remiss if I don't talk about the World Cup. Kudos to the U.S. team. They continue to impress. They really have done really incredible things, and I think a lot to be proud of. I was a naysayer. They did not have a good run up to the Cup, and they certainly I didn't think they had a team that could put on the field to win like that. Now, they haven't beaten great teams. Australia's a pretty good team. They haven't beaten great teams. But to get out of round one and into round two is a big deal, the elimination round. And I would be really happy if we could just get through this, get into the second round, and then go from there. So we're, let's win the next. Let's get out of this round. We're already out. We're going to win the group. Let's win the next game after we had group stages, and then that'd be a successful World Cup. But who knows? You never know what kind of momentum these kids can put together. Great story about one of the defenders, Antonio Freeman's son. Antonio Freeman is a Hall of Fame football player, and his son's a defensive back. Freeman as well. If you keep an eye on him, he's a very talented D-back. He scored a big goal. So it's quite incredible. Time for shout out of the week. My shout out goes to Alan Greenspan. often known as the Maestro. He was the Federal Reserve Chairman, can you believe it, for 18 years, through 2 recessions, through the dot-com bubble, through the 9/11 terrorist attacks. The guy was really one impressive dude. He died at 100, unfortunately, of Parkinson's, but God bless him, he made it to 100. And I just think it's pretty amazing that he went that far. He was a very smart man. He was a very kind of leader of the Fed, big personality, liked to put himself out there. Maybe a bit too much of my bad. I'd prefer the Fed be quiet and out of the way rather than the living color. But he was the chairman for 18 years. And he'll go down in the history of Fed chairman as certainly as one of the best. So my shout out goes to him because he was a forward thinking, quick moving guy. He built consensus with other Fed governors, very witty. He was famous for his phrase, irrational exuberance. When he said that, the market blew up. And he was right because he was early on the tech bubble before it actually happened. So my hat's off to Alan Greenspan, former Reserve Chairman, one heck of a smart guy. And I don't know that we'd have the country we have today without his help. So hats off to them. And with that, have a wonderful week, and I'll talk to you all real soon. Thanks a lot, everybody. Bye-bye.